Good morning, traders. It's 8:03 a.m. Chicago time on the 18th of June, 2021. It is Quad Witching Friday. First things first, I'm broadcasting from home, and it's a different setup. Can you give me a mic check? Let me know if I sound okay, if I'm blowing out your speakers or what, just to let me know. It's hard for me to check it without starting the broadcast and listening to it myself. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2017. 2017. Um, Little hollow, little soft. Yeah. All right. Let's see. Let's get rid of this thing. Here we go. Okay, so um, that should be a little bit better. Maybe too much. I don't know. So we'll see. I guess we'll make do because it's just more important to focus on what we've got in front of us. Let's move over to the pre-market summary sheet. You're not going to see my mug today because, again, I'm at home dealing with some really, really bad allergies today. So the pre-market summary sheet, risk off sentiment across the board. You can see that some of the index products, uh, are way down. The leader on the downside, or the big loser today, is the DAX. The DAX down 1.5% along with the Euro stocks. We have the Russell down 2,000. The Russell 2000 down 26 points or 1.14%. The Nasdaq's off 66 points or 0.5%. The Dow's off 280 points, and the S&P is opening. It was opening on the edge of yesterday's range. Then it dropped 10 points to 4173.50, and is now opening at the edge of yesterday's range again. So it's an interesting spot to be in this morning. Crude oil's off. It's back to $70, trading at 70.40, down 38 cents or 0.5%. I think I filled at the pump for $4 a gallon yesterday. Pretty insane. Of premium gas here in Chicago at Costco, of all places, the cheapest place to get your fuel. It's incredible. It was like $2.40 or 50 cents last year. You would expect money to flow into the 10 years, the 30-year bond, and the Euro bond. We see some inflow into the 30-year bond and the Euro bond, but not by much. Silver is higher, gold is higher, and crypto has come off quite a bit and has recovered a little bit overnight. The things to pay attention to today: it is Quad Witching Friday. The settlement price for the expiration of the June contract, which will stop trading, will be right at the cash open, right at 9:30 Eastern, whatever the indicated price is for the underlying S&P 500, for example. That price will be selected, and the contract will settle financially or in cash. And so that ends that. The DAX and the Euro stocks have switched over to September today. The market condition is trending down. We have 309,000 contracts. The inventory 72% short. We've got 46 points of range, which is very unusual for an overnight session. So we're coming into a session that may see a fair amount of activity. The problem with it, of course, is that it is Quad Witching Friday, so there's going to be a lot of kind of jerking around, delta hedging and stuff, especially with a move this big. So there's going to be a fair amount of hedging and other activity as we come into today's session. So that's pretty much the summary of what's going on. Rotations have expanded just a little bit. I checked it last night. The S&P went from 4.25 in harmonic rotations on a 1 minute to 4.5. So nothing dramatic. Still using the same parameters for stops and so on. In looking at what was expected yesterday, given the way it popped on Wednesday and the fact that the overnight session tested lower and was starting out above VWAP mid and formed basically a cup and handle type of formation. Not that I'm a formation trader. The way it had set up, it appeared to me that the 4206.75 overnight high at the time of the trader bite was very, very vulnerable and was likely to be taken out on the open. I expected it to pop through the 0675, pull back a little bit, start pushing towards 18, and then eventually shoot for 28 before it gives in. That's the primary scenario. The secondary scenario is a push through the 0675 into 420809 and then drop back in, and then I expected it to drop as far as 85 right here, 85. And then I expected a V bottom back to the middle of the range. What we got yesterday, because the market is being very charitable, is both. Here's what we saw yesterday. We opened a little bit higher. We opened at 4208.75. The overnight session actually pushed to 4210 right before the open. Just the 10 minutes left we had left between the time I shut off and the open. It opened at 4210 and or it opened at 0875, pushed to 4210, and then had a bit of a drive. We saw a fair amount of driving behavior. It pushed through the 18, again, the MC point of control at 1850. And the next area to test was right up here. This is just a sweet target. When we see a double top like this and the market starts to turn its way back up, then we're looking for that to be a key target. We're looking for a breach of a double top. I know others look at a double top as a solid resistance, but that's not the case for us. So we pushed through 18 and we got to 2150, and then we immediately turned over. This push through 18 provided some actually, to me, very clear entries for the long, for a breakout long, trading from the inside out. I posted those setups in the head trader channel at convergenttrading.com, and overall, we managed to kind of get to 2150, and then the next rotation down basically took back everything. Yeah, I know the sound isn't good, but it's a different headset and a lot of problems with the audio. If you're an audio engineer, I'd love to talk to you. Get a hold of me at futurestrader71.com/contact, because it seems like we're always dealing with sound issues. But in any case, we came back to the open, so hands off the longs at this point. It goes back to mid for the first try, pokes through, gets back to mid for the second try, mid being this blue line. This is the RTH mid, this is the full session mid, and then it finally pushes through to VWAP, almost to the full session mid, migrates the entire distance. So this is where things got goofy. It crossed the entire range to take out the IB high by one tick. We call this a one tick failed auction. We expect the market to turn the other way. This is an example of a market that has made the work, has done all the work to push all the way to the other side, and then on a poke of the prior high, it found zero interest. And if it found zero interest, generally the opposing side kicks in because now you're confident there isn't much lifting and just hammer on prices. That's what a one tick failed auction generally means, and we cross all the way back through. This you could lose your ass in this kind of action here. This is what we call a whipsaw. And then we extend to the other side. So we've broken the IB high, and we've broken the IB low. We have a neutral day, and then we start working scenario two. Scenario two, which brings us right down into 85.50. Remember, the expectation is 85. And then from there, we put in a lower low. We test 86.25, we put in a lower low, and now I'm looking for a higher low. I'm looking for a higher low for an outside-in breakout towards the middle, and we just could not get it. We did not get a clear indication here. And the next big area to test is full session mid, RTH mid, IB low, and it just squeezes right through. Another place to lose a bunch of money on what we would consider to be a typical setup. The caveat, of course, is it hit its main target. So that kind of puts us off of it a little bit, but the trade is there. The only difference is size is reduced to compensate for the fact that the setup isn't has this V bottom potential in it, as discussed in scenario two. We get back to the middle of the range and we chop around the middle of the range for most of the afternoon, and then we finally drive to get to the other side of the IB once again before closing neutral normal right against the middle. Yesterday essentially was a day of indecision, and it definitely didn't make it easy to figure out what this thing wants to do. Here's something I was discussing, and I'll share it with you here real quick. I'm going to do my best not to make this very long. This is an analysis of rotations on a 4-tick Renko using a 10-tick pullback. The pullback rate has fallen from 16 to 14 to 12 to 10 over the last few months. But this is what it means to study rotations. Rotations. I've said this a lot. Rotations are what make or break our ability to have opportunities in trading. And I wasn't going to share this, but I felt that it was important to understand why we day trade. We day trade because we want, if we had caught the high, I should have used a dark background for this. If we had caught the high right here and held it through the overnight session and got out right there, we would have participated in about 40 points of range. 40 points of range. But within this, there are many, tens of times the rotations. So what this chart's showing is how many rotations occurred on FOMC day. It's right here. The number is pretty high, right? About 200 rotations occurred. And in those 200 rotations, we had about 3,500 ticks. 3,500 ticks. If you traded perfectly like you would on a simulator, you would have caught 3,500 ticks per contract. Of course, we're not going to catch 3,500 ticks per contract, but that's how much is available. And so for the entire day, if you had sold the top and bought the bottom on FOMC day, from start to finish, you may have participated in about 54 points of range. 54 points of range are about 216 ticks. But actually, there were close to 4,000 ticks available. 4,000 ticks available because of the rotations. And just to give you an example of how low volatility, if you've had a really hard time in May making money, especially after May 16th or so, look at these rotations. Very, very low. This is why we use Renkos. We don't use time. This is why we monitor rotations. And then you get FOMC day, which was multiple times what it did the prior days. And then you get yesterday, which is a fair amount. Yesterday generated 1,879 ticks in 94 rotations. So if we aim to catch just 5% of those per contract, that wouldn't be so bad, right? So you can see how the rotations really govern what we do. Um, here's 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 the 19th. Look at the number of rotations here. Very, very high, 5,700 and some odd rotations. Let me pull it back a little bit. To the end of the day, 5,883 ticks in 309 rotations. Those are the big days. Those are the big days, not the days where it's just kind of chopping around like down here. Okay, something to be aware of, something to know and note about your performance. You're seeing your performance, you're seeing drawdowns, you're seeing a grind, you're having a hard time making money or making sense of the market. The first thing to check is your rotations. Capiche? You got that? Very important fact to remember. Very important fact. So here's the overnight session. We open up and we're sideways. I expected, given the V bottom here, given the rejection of the low, I expected us to drift back up. I expected us back at 42.18, 42.18 in the overnight session, balancing there like it did. We have a point of control at 42.15, and I expected us to start walking towards 21 and pushing 28 as we came in. I was very confident, very confident in that. Well, it went sideways through the Asian session, and then the Europeans came in right in here is where Europe opened. And then from there, it's just been spilling its guts here. Europe's leading the sell-off. Remember, the DAX is down 1.5% in our pre-market summary sheet, and it's being fugly. And we're doing a great job cleaning up the weak areas beneath us. We filled in the gap a couple of days ago, and we are one time framing lower. So here's the reversal day of one time framing. This is a lower high. This is the first day. This is day one of one time framing down. We've got a lower high, lower low. This is day two, lower high, and we're likely to fill in day three of a lower high, and we're making our way down to the big balance in this area, which used to be 41.55, which is now 41.45.50. There's a lot to work through as we push lower. The 41.70 area, you could see where the market accepted and rejected prices. You could see it in the volume profile and the composite. These are the areas we've battled in. We're leaving our most recent point of control behind. We've left the 42.19 behind, and we're still struggling with this 41.90 to 41.95, and we're likely to open in a slight gap lower. That's the condition right now. This is likely. My expectation is it'll continue to one-time frame down until it does not. So yesterday's high is important. Yesterday's high is 42.2275. 42.2275 until it takes that out. Then the ball is being controlled by the sellers temporarily. What I was reading into buyers is the excess on the daily, here. This is why I expected it to push higher, take out that 22.75 and walk us back to 42.28, and ultimately 42.35 is the key number above, but it's looking kind of weak. So to me, the big balance area below, the big balance area is 41.45.50. This is the most traded price in the region. And just short of that is the 50 SMA area at 41.65. This used to be 41.75. 41.75, if you recall from the March contract, received a lot of attention. And so that's the next big area down. And the overnight session pushed to 41.73.50. So we tested this 75 area here and have popped back up a little bit. It won't take much to gain a push of another 30 points lower. Let's take a look at what's expected for today. I looked at the order flow, and there's not much to show you there. I'd love to show off the capabilities of the Edge Pro X platform, but we don't have much time. The microphone sounding hollow may just be my voice. Okay, so what do we have here? And I got to stop clicking my tongue here, old man. Not that it's bad to be old. All right, so what we've done is we've completely busted through right up in here at the open yesterday, 42.08, and we've turned this into a trend down, and we're consolidating at the lower end of the range. We now have, instead of a trend day profile, we have a multi-distribution profile with like fluff in the middle. So the important thing for me to watch this morning is how we handle the break above the low volume node right here. So what are we doing to test 4190, knowing that 95 is the next key stock zone above? Early on, this would tell me what the market condition is. So I'm going to keep an eye on 4190 and how it's treated. Don't lose sight in the noise. This morning, the expectation is for responsive buying. The inventory is quite short. It's about 80% short currently. I'm looking for it to be responsive, consolidate, and then start to move through the single prints back from 41.75, and then to start making its way through 41.64.75, consolidating at 41.64.75 before coming back into the range, yesterday's range. So remember, it's quad witching Friday. There's a lot of, the price for June is set at the open, but the options remain deliverable through the end of the day and through the weekend. So there's going to be people who are needing to interact within the futures market to be able to deliver on those contracts, on those obligations. So they may have to hedge their delta throughout the day. But for the most part, the volume delta, the volume itself, should be quite descriptive of the action. The secondary open auction immediately dropping, testing this low, attempting to push lower. But as soon as if we get a test early, we're likely to get a reversal, and I'm looking for it to come back to the open, squeeze through the 41.90 back to 41.95, and then to start walking itself back through to 42.05 area, and that'll give us pretty decent range for the day. So 42.05 up here. We're looking at the 95 as the next key area above, and then below here is 65. 65 is the area that I'm expecting it to run to on the downside. The third scenario is an open test drive down, So if we open and we're immediately responsive and we see an aggressive push down, so first push up, then an aggressive impulsive move down, then we are likely to push into 65 very quickly. But the prize for the day is going to be what? 41.45, and that seems like a lot of range, but it's just 50 points. 41.45 becomes the prize for the short side on any open test drive down. Okay, I'll leave you with those thoughts. We were going to do this thing where we would tell us where you're from and so on, but there was a lot more to talk about. I'll get that done on Monday. I'll catch you on Monday morning in my better setup at the office, better sound and everything. Hopefully you gained something today, and good luck. And remember, it's Quad Witching Friday. Good day to be conservative with your risk. Good day to be conservative with your risk. Good luck.